No one has made an effort to gather data for all the institutional investors that support white Americans, but if you look at all the Western Caucasian-founded startup companies that overall received trillions of dollars through IPOs, a sum unfathomably disproportionate to the support given to black-owned companies. A thorough investigation will uncover the systemic racial sabotage of minorities involving institutional investors, how retail investors nicknamed bag holders get trapped in investments by market manipulation tactics, how hedge funds borrow millions of dollars to ambush the average investor, how all the corrupt market manipulation goes unchecked by the United States Securities and Exchange Commission (SEC), and how they all tie into a network that perpetually incorporates the legitimacy of the irreproachable status of being considered white. Within the worldwide pirating operation taking place by paper, and now digital trading, the power dynamic has grown so large in scale, it would take all the world leaders to disrupt all the internal biases, a process that finally will give black-owned businesses equal startup support. Institutional investment, particularly in the venture capital space, disproportionately flows to companies with white founders. This trend, documented across multiple studies, is a product of systemic biases and a lack of diversity within the investment industry itself. Key statistics on investment disparities, dominance of white founders. The overwhelming majority of venture capital (VC)-funded startups are led by white founders. As of 2023, studies found that white founders receive around 77% of all venture capital funds. Venture capitalist demographics. The investment community that decides where this capital is allocated is largely homogeneous. In 2020, venture capitalists were 80% white, with the majority of capital continuing to be invested in white male founders. Lower success rates for minority founders. Despite evidence that diverse teams can achieve higher returns, black founders in particular face significant funding challenges. In 2024, U.S. startups with black founders received only less than 1% of total venture capitalist funding, a notable decline from previous years. One study found that black-owned startups raised about 1/3 the amount of venture capital as other startups formed in the same year, even after controlling for location and industry. Contributing factors to racial bias in institutional investing. The reasons for this disparity are systemic and multifaceted. Racial bias in evaluations. Studies have shown that asset allocators, who manage investments for institutions, tend to rate white-led teams more favorably than black-led teams with similar performance levels. This phenomenon is known as bias above the bar, where strong credentials for a minority-led team are not recognized or rewarded in the same way as they are for a white-led team. Homogeneous networks. Investors often rely on pattern-matching habits, gravitating towards founders who look like them and share similar backgrounds. This insular approach perpetuates the existing lack of diversity, as most investors are white and male. Lack of transparency. Limited transparency and oversight in how funds are allocated and managed allows systemic bias to persist. Inadequate pipeline is insufficient explanation. While some point to a lack of diversity in the pipeline of entrepreneurs, research indicates that the issue goes deeper. Systemic bias in how investors evaluate funds, rather than just a limited pool of qualified minority candidates, is a major contributing factor to the investment disparities. Difficulty for minority-led firms to advance. Even when minority-led firms achieve strong performance, they may face additional barriers to raising subsequent funding rounds, as their success contradicts investor stereotypes. Indirect institutional investment. Some institutional investors indirectly support minority-owned businesses by investing in venture capital firms or other funds that specifically focus on diverse founders. However, the overall funding landscape continues to show significant and persistent racial and gender disparities.